This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets, the earnings, the SPY technical analysis, and if there is enough time, I will go over treasuries for October 31st, 2025. And happy Halloween, everyone. But let's go ahead and jump straight into the data. And going over the data. Now, again, the shutdown is still ongoing. I know that the Senate has pretty much been called out for the weekend, so there will be no decision on the government shutdown until perhaps Sunday evening, early Monday morning, if they decide to make some, last minute agreement. But it does look like this will be continuing well into next week, which is quite unfortunate. Now, with that said, we had Fed member Bowman speaking today. I did not really focus on what Bowman said. We also had the balance sheet, but balance sheet's really not important right now because we do know that quantitative tightening will only be continuing for another month. Um, you know, tomorrow's last day of, or today's last day of October, so we only have that additional month left of the tightening period, and I will go over that more if we go over the treasuries. But getting into tomorrow's data, or today, depends on when you're listening to this. Um, we're supposed to have the PCE data. We're supposed to have the Atlanta Fed GDP now. And we also have Fed member Bostic speaking. Now, again, the government shutdown is happening, so we don't know what data we will get or not. The data doesn't really adjust to what's showing on here, um, or what's actually being released or not, until the actual day of. So until tomorrow, we don't really know what's going on. With that said, if we do get the PCE data, that'd be great. That's the personal consumption expenditures. That's super, super important. That's one of the Fed's main primary data sets they pay attention to. And it tells, quite a major story. Um, it we have been seeing that going up throughout the trend, throughout the majority of 2025, but I think that's fair. There was a lot of uncertainty with the tariffs, and now that the tariffs have really been implemented, besides the one with China, but a deal has just been struck from my knowledge. So, all the tariff uncertainty is really just kind of thrown out the window. Um, we should be seeing the PC start to gradually slow down and moving upward and start to eventually decline. That's what we're looking for anyway, but we will see. Now, let's go ahead and talk about tomorrow's earnings. Now, there is no major earnings for tomorrow, just bear in mind. I mean, there's Chevron, there's a few of the oil ones, but nothing major. We had Amazon, Apple, Coin, Strategy, all those earnings today. Um, Really none of that's going to matter too much right now because we did have the China deal, um, you know, get struck, so it doesn't really matter what happens with these earnings. But I will be kind and just quickly go over what I am seeing. So in the evening, overnight, I am seeing Apple doing well, so I am assuming that Apple did well in their earnings. I am seeing, oh wow, Amazon is up a whole 13%, so they killed it. Let's see, what else? Coin is up almost 5%. They are doing very well. Let's see, Strategy up almost 8%, so they are doing extremely well as well. And let's see, Eli Lilly, they had their earnings in the morning. They had almost a 4% day, so they did well in their earnings, it seems. I won't check Reddit. If you want to check Reddit, go ahead. Um, but yeah, it looks like a majority of these earnings did very well, or at least the deal with China is causing the overnight to just go crazy. Um, One thing I do want to circle back to while we're discussing earnings and everything, and this kind of goes back to the Treasury talk, but it does fit this section. Now, Chipotle had their earnings on Wednesdays after hours, and they reported an extremely bad guidance. Essentially, they're saying that they're expecting holiday customers to really just slow down. They're expecting quarter 1 customers to really slow down. They're seeing consumer spending just really drop through the floor. Now, I don't really care about Chipotle. I don't have a leaning one way or another other than I do buy shares when it dips down. So I did buy some of the dip. But besides dip on Chipotle, um they were for a very long time during 2025 and late 2024 one of the leading chains of restaurants out there. They offered customers a wide variety of different priced options, and you can get a lot of food for pretty pretty cheap. And with all things considered. Now, when Chipotle is now saying that they're basically guiding forward really, really poorly, that should be a major wake-up call because they were literally the best not even that long ago. And they're saying that consumers are just not buying anything right now. Um, that should be a massive warning sign. We've been hearing that from multiple companies. We had Amazon do or they will be doing a layoff, I believe, of either 15 or 30,000 people, and replacing them with AI, which this is something we've been discussing for many, many months now that this was coming up. Um, so this is all tying back to that the economy is slowing down. This will affect growth, which means the GDP. And we'll see if the GDP will continue to be carried by the, you know, top few companies in the Mag 7 and everything else, or, you know, if we will start to see some of that weight distributed a little better. Um, my guess is we're going to continue seeing, excuse me, a lot of the GDP weight relying on these major companies. Basically the 1% versus the 99% right now. The 99% is really starting to fail, and that earnings with Chipotle should be a major sign that, of what's to come. So, yeah, not to be doom and gloom, but I did want to discuss that. It was a major point for many economists and everything, and really reading over the guidance and everything, I definitely agree. Knowing that CMG was pretty much the top of the line of restaurants for many, many, many months. Um, it is very surprising that they are guiding so low. So, yeah. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal Gex and Dex market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the technical analysis, I will make this fairly quick as everything has been kind of playing out exactly as we anticipated and, discussed in the last few videos. So, as always, going over the moving averages and Bollinger Bands, we did have our 5 mod test today. We discussed how, again, this is the 5-day moving average. That means on average, every 5 trading sessions, we will test that level. Okay. Um, I like to use the moving averages sort of like clocks. So again, the 5-day moving average, we should anticipate to hit that level every 5 days on average, right? Same thing with the 10-day moving average. we should expect to hit that every 2 weeks. The 20-day moving average, we should expect to hit it roughly once a month. Okay. Those don't always align perfectly, but that's why it is the average. Um, it's going to hit those levels within that average time frame. With that said, we did test the 5 mile, and from this 5 mile test, it now opens two different levels. Either we can continue upward towards the upper Bollinger again, and the upper Bollinger will be opening up probably to the 690, 691 range as of, tomorrow's open. Um, Again, there was the deal with China. I don't know if it was officially signed and everything else, but from what I know, the deal has been struck. So that's going to be very bullish for the market. If the market wants to close that gap back up to essentially the all-time high, um, everything's open for them to do that. The upper Bollinger is going to open upward. Um, Currently the overnight is at 684.67, so the market closed at 679.83, so it is up a whole $5 in the overnight. I would not be surprised if we have a second upper Bollinger push. And again, if we do have an upper Bollinger push, going over the mechanics, upper Bollinger day 1, we do want to see a close at or above the upper Bollinger. So assuming tomorrow the upper Bollinger's basically going to be around that 690 range. If we're going to have that upper Bollinger move happen again, then we want to see a close at or above that 690 essentially. Now, the flip side of the coin is that this 5 mile test also unlocks the 20 mile. So if we decide to, for some reason, have some crazy sell-off, and let's just sort of talk about that for a moment. Um, this China deal could be a very bullish thing for the market, but at the same time, it could also create a sell-off event because just the volatility involved on both ends. And people think of volatility in terms of just a negative thing, but volatility is also the inverse. It's the positive as well. And because volatility has been essentially pushed down so low, um, now that uncertainty is kind of out of the question. Sorry, my daughter's knocking on the door. Now that uncertainty is kind of out of the question, it could give the market a reason to essentially sell down to a specific level that they know is safe and then rebuild the price up from there. So I know that sounds a little silly, but I have seen it happen a few times. Um, I doubt that's going to occur. That's something to be aware of. If we start selling down, and the real key here is the 5 mile. What is the market doing from this 5 mile level? Because currently the 5 mile is at 683.35. The market closed pretty low today. Today was a fairly large selling day. It was down a whole 1%. But with that said, with the overnight price and everything going crazy upward, it's very likely that the 5 mile is going to be extremely close to where it is right now. Maybe at the very, very lowest, it'll be around that 682, which means that this 684 range is the upper side of the 5 mile, the upper bounds. So just be cautious of that. Um, if we have a bounce off of this 5 mile level, take that as bullish. That means that we're pretty much going to be going to the upper Bollinger. If we have a rejection from this 5 mile level, then that's a very, very good signal that we could be moving down to the 20 mile. Now, before I go into the hourly structure or anything, I just want to highlight this again. This is the VVIX. Okay, this isn't the VIX itself. This is the VIX volatility. So when there's actual selling occurring, this will move up within the intraday. So just looking on the 5-minute time frame, this thing can go all the way from 90 something dollars all the way to 110, 115 within a day. It can drop from 115, $130 all the way back down to 90. Um, it moves very, very drastically because it's basically a tool. It's monitoring what's going on with the volatility in the actual VIX buying or selling. Um, and that's not the VIX contracts itself, that's the actual VIX like volatility insurance people buy for their future vehicles, um, or their futures SPACs vehicles and stuff. But basically, we're right at the 5 mile on the SPY. If we're going to have a selling day tomorrow, then the VVIX is going to be going absolutely crazy. If it's going to be a bullish day, then this thing's going to be pulling down very, very quickly. Okay. Because really from this level on the SPY, we are either going to pull up to the upper Bollinger or back down to the 20 mile. There's really no in between at this range. Now, going over the hourly time frame, and I already see bullish structure. Yeah, we already see some of this cup being filled to the upside. Now, we did have some selling here, but let's just go ahead and take a look at our drawings. We expected a slight downside again yesterday. Remember, um, we did have that downside. We discussed how potentially this could be just a simple 5 mile test. And then from there, we could see pretty massive upside again. Um, that's really what we have to contend with now is essentially forming a cup all the way back up to all-time highs. And from the top of that cup, forming a bearish structure so that we can pull down, create the liquidity to pull to, again, higher highs. So that's what you're looking for if you're a bull. You're looking for continuation of this, bullish structure from here. You're looking for continuation with the buying from that 5 mile level. Now, if you're bearish, hold on. You're bearish from this level. I'm not trying to. Then we need to see completion of this inverse cup. Okay, and now this isn't all the way. We still have a fairly large block right here that needs to be taken on the selling side if this is going to be, some actual real selling structure. But we do have the makings of a inverse cup and handle. Potentially we can pull down, fully create that bearish cup, and from there we would have to work on further structure because at that point, this would be a large inverse cup. And from that inverse cup, we'd want to create more liquidity to break under this upper consolidation channel. So that's kind of what we're looking for as, if you're bearish on the SPY right now, I would not be trying to short this just yet, personally. Again, I am shorting the HIG as that to me represents a lot easier risk to short as if we have a credit event, if we have any form of equity selling, the HIG always gets chopped pretty hard. So I'm absolutely fine shorting that right now. With that said, I did take a short from the upper Bollinger Day too. I did not get a really DCA it yesterday too much. But I was able to clear those positions today with a profit, so that's good. Now, with that said, if we're going to short this again, you need to look for the upper Bollinger Day 2, or you need to look for the rejection of the 5 mile. Um, don't short unless you see either of those, because if you don't, then we're going to go to all-time highs. Simple as that. So, yeah, that's the SPY. And very, very quickly going over TLT. Um, I know there's a ton of stuff on my screen right now, but I really want you to just focus on this white channel. Okay. The two white lines anyway. For my colorblind viewers, if you could see where my cursor is right now, it will be these two lines going horizontal across the screen right here. So this area. Now, we did have the pull down as we expected. Okay. This is a bullish thing in my opinion because this gives us our 20 mod test. Now, with the 20 mod test, very, 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 very likely we are going to start seeing buying from this level and working back upward. And this is starting to create bullish liquidity with the inverse head and shoulders. So what we're looking for is the right shoulder on this inverse head and shoulders to be completed and essentially closing this cup back up towards, that 92.40 range. Now, with that said, is that we are within a consolidation channel right now. Potentially, we can pull down all the way towards the bottom of this consolidation channel. And currently, that's around the 89.90. Going over the 4-hour chart will show this just a little bit better. Now, what I have circled here is that was the basing move. So that's what allowed us to break out of this previous consolidation channel into this new one. Now we're working on creating liquidity to either break down or break upwards out of this consolidation channel. Now, with that said, I know that some people are pretty fearful with their TLT positions right now. I'm really not. Everything we want with TLT is sort of occurring. We have quantitative tightening ending within a month. So the most bearish thing that I can think of right now is that we will see continued selling throughout the rest of November just to meet that quantitative tightening. And that means they're selling short-term treasuries to, essentially run out the money in the system. So we could see that kind of final push. Now, I don't really expect that. I do expect the 20 mod range to really be bought up and take us back up to the 92. And then we start working on that gap of the 95.20. Now, again, with quantitative tightening ending, um, we will be seeing the yields pulling downward. Now, with all of the other factors we've been discussing, with Chipotle, with Walmart, Target, all of these different companies that have been projecting weakness, we've been seeing corporate layoffs occurring left and right. We've been seeing major corporate bankruptcies happening within the last 2.5 weeks. And everything's kind of ramping up. Okay. And TLT is the hedge to anything going on. Um, if a major recession starts, TLT is the hedge to that. If a major issue happens within the banks, TLT is a hedge to that. If there is any sort of collateral crisis going on due to just all the different economics in play right now, TLT is a hedge to that. So just keep that in mind that if we're having any form of dip right now, I'm personally buying it up. Um, we should not break below this 89 range, 88.50 range again, unless we're seeing the entire narrative shifting and seeing yields pulling back upward very, very extreme again. Now, the 10-year did pull up a little bit today. It did pull up a little bit yesterday when the official decision was made. That happens every single time a rate cut happens. Okay. The rate cut in September, it caused this bumpiness and pulled us back up. You know, um, Going back to the previous rate cuts in, last year in September, we had the rate cut back at 3.6% in the 10-year, and it went on an absolute tear. Now, for us to really get back to that 88 level in TLT, we would need the treasury yields to absolutely break above the previous levels of consolidation again. And that's really going to be around that 4.178%. We talked about that range. That's a very, very, very key level. And so is this 4.2, I think it was 4.27. Um, we had it marked somewhere, but it was that 4.2 something percent was also a very key level. Breaking above that really means that we're starting to enter into that consolidation again. And from entering into a consolidation phase, depending on the narrative of the economy and everything, we can see yields pull back upward. So, is it something I'm really worried about right now? Not really. I would say yields pulling above these levels would be like a 0.1% chance. Extremely, extremely, extremely low. It would take massive, massive narrative shifts to really start pulling this up. Um, but yeah, that's all I really wanted to discuss tonight. With the selling today in HIG, we saw, a little bit of a selling day. Again, HIG can be somewhat of an indicator of major selling occurring. So if we see continuation of the selling within the HIG, that might be spelling that there could be selling coming within the equities. So as much as everyone thinks I'm bearish on everything, I'm not. These are tools, and following the current market narrative and everything, I try to use my tools to my advantage. So yeah, that's the technical analysis for tonight. Thank you all for sticking around and listening. I hope you enjoyed. Um, my next video will be on Sunday. I know I said that in last night's video, but I mistakenly got the date mixed up. With that said, I hope everyone has a great day, great night. Have an awesome Halloween, everybody. Um, have a great weekend. Have a safe trading day tomorrow, and take care.